driven, seasonally difficult quarter meant that we expanded the EBIT line by about 50 basis points, mostly through operational levers. And of course, initiatives that we had planned to take, given the outlook on the seasonality front was pretty well known. I think we expect to stay in a normalized band of 1525 to 1625, and definitely we've guided for a northward bias in the EBIT line over the last 2 or 3 quarters as well. So pleased that despite a difficult seasonal quarter, we were able to expand the operating margin profile, and we do believe that we can keep it in that range that we've talked about, while focusing on revenue growth as we get into Q4 and of course FY25.
Okay, just talking about the verticals this time and the performance, communication has taken a big hit. TMT revenues are down 9% quarter on quarter. Ex of the seasonality, what led to the decline?
Yeah, I think it was primarily driven by certain client deliverables, but mostly I would say seasonality. As we look forward to Q4, growth will be driven by BFS and TMT. So I think you called it already. There is, based on the pipeline and TCV conversion activity, we do expect BFS and TMT to lead the growth in Q4.
Okay, Nitin, short conversation today, but we've got a market to look at. But that's the management of Mphasis saying that Q4 will see organic revenue growth. They're also saying BFSI and the telecom vertical, that's TMT, will lead growth and margins will remain in their band of 15.25 to 16.25%. with an upward bias. The stock in an up market is down about 1.2% on the back of that top line miss. But can't take your eyes away from the screen. But now it's just, dithering around levels of 22,100. So that ascend is stopped or just paused for that, for the last 5 minutes. But in terms of sectoral gainers, CPSE leads charge. The Nifty CPSE index is a gain of 4%. Energy, which again comprises of Reliance Industries and a lot of the other PSUs, is up 3.2%. PSU Banks is up 3% today. And wait, hold your thought, 12% this week. The Nifty PSU Banking Index, 12% up this week. It's followed it up with, infrastructure, media, realty, metals, IT, banks. It's hard to find losers today.
Oh, absolutely. And on PSUs, the move is absolutely phenomenal. NBCC, SJVN, NHPC, Power Grid, ONGC. It's just simply cutting across, all kinds of market capitalization sort of thresholds or sectoral thresholds. It's a big PSU party. And I go back to the commentary that we had on public sector undertakings, the thought process, divestment, etc. Because, the answers coming in from the government seem to be suggesting a bit of a change of thought on this as well. So to a journalist's question yesterday in the, the press conference where all the secretaries were there, to a question saying that, why aren't you divesting right now when, the market's willing to offer great value? The answer of the divestment secretary was that, well, value is created in different ways. You can create it by selling, but we've anyway created value. And then he went on to give a lot of the numbers over the last 3-4 years. Just the total market capitalization of the PSU universe, listed PSU universe, how that has completely surged. Yeah. And therefore, the indication was they actually said that we don't want to put out a target. Divestment particular targets every year.
They have a target of 50,000 crore.
They do. But the thought was that, in
you're
some
not going to be tied down by a particular number as long as you're adding value, creating value in PSUs.
Yeah. In some years, you get the strategic opportunity. You might want to sell more. In some years, you might sell less. But they don't want to commit to, absolutely be sort of held to that one number on divestment, because the thought process is that, the markets anyway, looking at more value creation, looking at more efficiencies perhaps coming in PSU stocks. Well, we'll try and get you more market commentary and also some trading ideas. How do you deal with a market that's surging to fresh highs? Back with some technical views in a bit.
big budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive. The big budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive. The big budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive.
Welcome back. So we're tracking what is a red hot market. Let's just go back and take a look at the rates. So there's a, you can't even call it a cool off. We hit the all-time high and there's a 30-point sort of a downtick that's come in. But let's look at some of the movers and shakers on the mid-cap screen, and it's all PSU. Beyond that, if I look at some more names, there's for instance, the South Indian Bank that's up and about. Actually, no, I can't, Rima, I can't get beyond PSUs. Look at the volume chart and the price moves. And it's just, from REC to SAIL to ONGC, it is just PSUs, as I mentioned, NHPC, PNB, IOC, the entire...
BEML 17% up, SJVN 13%.
I found a Zomato. I'm trying to look for non-PSU stocks that have good price and volume action. I found one there. That's Zomato. Now it's up to you.
Well, actually, Okay, we have Gautam Shah of Goldilocks Premium Research joining in. Gautam, what was the genesis of this rally? Suddenly, in the last 1 hour, we've seen the market zoom. We had a gap-up opening. But the Nifty was hovering around 21,900 in the morning, a little more than that. Where did these last 200 points come from?
Well, I think there are too many stocks which are batting for the Nifty and batting for the market at this point of time. I think the participation has been excellent. The momentum is anyway very, very good. And liquidity, has been there, all this while. And as the budget, the interim budget was out of the way yesterday, you might have noticed the big cool-off that you saw in India VIX. So it was almost as if the market was waiting for the budget to be out of the way. And once that happened, the aggressive buying started once again. Momentum was back. And once that 21,850 number was taken out, which I highlighted in my interaction with your channel a few days back, I think that's just added fuel to the fire. And now we should be seeing further upside because the market is still far away from being overbought. And hopefully in this run, we should see a move towards 22,500 and beyond. However, the real theme, the real opportunity is in stocks. So one should really not see too much of the Nifty and Bank Nifty action, but focus on stocks.
So just tell us, at what point do you think the markets will appear overbought? What will be the signals? If someone buys today, when is the right time for them to start getting worried?
Well, I think you cross the bridge when it comes, to be honest, because you can't put pointers. We've seen it in the 2003, 2008 bull market, how things can just keep getting better and better and better. And we've seen a parabolic rise in many of the PSU stocks. I'd one taken a call 2 months back that, this is a little overdone and you should be taking profits. They'll be feeling bad about that decision. So I think one should just tag along, not overanalyze much. The market is not overbought. So please understand, we went through a good 1 month of consolidation. We were overbought at the starting of January, but this healthy consolidation of the last 3 weeks has just made the market cleaner, fitter, and healthier. So I do believe that there is a lot more momentum, and with global markets being as strong as they have been, and with the Fed event out of the way, it just seems as if it's a Goldilocks scenario for India.
No, absolutely, Gautam. I mean, even whatever little disappointment that markets had to exhibit because of, Fed saying that nothing is going to happen in March, it didn't last, right? It was just one day and yesterday was back to business. So completely take that point. Let's bring in Rahul Sharma into the conversation as well. Rahul, just want to get your thoughts in on, Nifty, Bank Nifty, what trades you'd look at. And please give us a specific call on PSUs. I want to ask Gautam this as well. Again, no point analyzing what's happening, OFS, this, that. The point is serious momentum in PSUs. Should one be riding along? And if yes, how? What kind of stocks? And how do you ensure you don't get burnt if you're getting in now?
Yeah, hi, very good morning. So definitely the way we've taken out the resistance of 21,800, it seems like there is more fire to the rocket. Now, my point is, it would be unfair to put a target on the upside because that's how the nature of this move has been. At best, the best thing to do is look at, any dips, if any, as buying opportunities. Now, the tables seem to have turned after a month of being cautious on the Nifty. And it seems like, the PSU, PSE space should do extremely well. We have added on to the PSU bank names to be precise in the last few trading sessions. And we feel that as long as there is no macro change or there is no technical sell-off, the best thing to do is just keep on trading stop losses and ride the rally that we are witnessing in the PSU banking names. To put it straight, I think, unless and until there is any sort of reversal seen on the charts, at best keep a trailing stop loss in place, and there is more upside to be had in this place.
Okay. All right, gentlemen, thank you very much for that quick call. We look forward to a longer conversation about a market that is absolutely red hot right now. Thank you very much, Gautam and Rahul, for sharing that quick perspective. With that, it's a wrap on this edition of Trading Hour. Thank you for watching. All the action continues. Up next is Halftime Report.
Big budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive. The big budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive. The big budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. in conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive. The big budget exclusive in the most comprehensive budget interview. Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead in conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive. The big budget exclusive in the most comprehensive budget interview. Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead in conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive. The big budget exclusive in the most comprehensive budget interview. Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead in conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive. The big budget exclusive in the most comprehensive budget interview. Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead in conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive. The big budget exclusive in the most comprehensive budget interview. Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead in conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview.
A bunch of PSU stocks, you just name them, you have Coal India, Container Corp, or names like PNB, Union Bank, NBCC, all of them are at fresh record highs. So it's been a very, very strong market where every dip has been bought into, a little bit of volatility, and market comes to run ahead as well. No bad news in the budget means good news for markets. And perhaps now the market is pricing in political stability after the central elections as well, and which is what is reflective in the kind of moves that we're seeing in PSUs, Ekta.
Hi, Manglam. Yes, absolutely. I think the consensus feels that the government was confident enough to actually go ahead with fiscal consolidation and not be deterred by upcoming elections. And that seems to be weighing in on the markets in terms of the positivity. I just want to point out that you did talk about a lot of the PSU stocks. The Nifty PSU Bank Index has gained 12.5% on a week-to-date basis. So that's the kind of gains we're going home with the PSU banks. We have oil and gas, which has gained around 8%. We have a lot of the other indices, such as the Midcap index, which is up over 3% on a week-to-date basis. The frontline Nifty index also has picked up around 3%. So there are gains all about. The Nifty Bank also up around 4%. And that's where you can see the fervor come through on a week-to-date basis. We've gone through the interim budget. We've gone through the FOMC policy. And it seems as though the markets are undeterred and giving a thumbs up to all of these events. But nonetheless, we do have a couple of numbers to talk about. We have Sun Pharma, which came out with its Q3 performance just a couple of days ago. It was better than estimates as it reported healthy growth in sales across the US, India, as well as the global specialty business. In fact, Q3 was the best ever quarter for the global specialty sales. I did catch up with Mr. Muralidharan, who's the group CFO of the company, and began by asking him on what is driving the growth within the specialty segments. Listen in.
For the quarter, excluding the milestone 276 million growth of 24% year on year, the products across all the specialty products, Ilumya, Sequa, all the products have a broad-based growth that has contributed to the overall good performance of global specialty sales.
Okay. What then is the run rate expected for the specialty segment? When can we probably hit $300 million? When would it probably sustain on a quarterly basis?
So if you look at the 9-month YTD December global specialty revenues on a consolidated basis, we have done about $768 million with a growth of 22.4%. And you compare that with the previous year full FY 22-23, we had done about $871 million. So I think we are in good position to further gain momentum in this business and continue to perform well across various products in the segment.
All right. What is the status of the drug for alopecia. We do understand that it could probably, start adding to revenues by FY25, FY26, and it could probably even become a $200 million product. Your thoughts on that, and what is the timeline of launch?
So we already shared the PDUFA date is somewhere in July of this current year, 24. On approval, we are on track or plan to launch on approval. However, at this point of time, as we mentioned in the call also, that we will be unable to share any peak sales estimate for this product at this point of time.
Okay. The company said that Revlimid generic contribution was limited. Why is that, and do you expect it to scale up?
The generic Revlimid sales has been episodic as such, which we already shared earlier. So as you rightly said, in the current quarter, it was quite negligible to the overall consolidated revenues.
Okay, but why is that?
That's how the market is overall panned out and structured, you can say.
Okay. What about the US-based business? How did it perform? What was price pressure like this quarter? And what are you guiding on? Because we do understand price pressure is down to around single digits as compared to double digits same time last year.
US generic business, as you're aware, in terms of price pressures, it may continue to remain very competitive. And as we have maintained in the past, the pricing also is a function of the product specific in which you participate at this point of time. We are reasonably satisfied with the overall performance US generic business in the current quarter.
Okay. For Taro, what can we expect, say, on the delisting process? When could it probably be completed?
So the Taro transaction process on at this point of time, we had signed a definitive merger agreement with them to buy the remaining stake that we doesn't own as on date. The agreed price of $43 per share will deliver approximately 48% premium to the price that was prevailing on May 25, 2023. However, the merger agreement is subject to various closing conditions, including shareholders' approval. So we'll have to wait and watch in terms of how this will pan out as and when the shareholders' meeting of Taro happens.
Okay, but if in case the delisting does go through, what are the synergies that you expect between the two businesses? How do you think, say, blended margins would pan out, revenue?
Taro being a public company, I think it will be fair for us to first to cross the finishing line of closing the transaction, assuming we have a favorable verdict from the shareholders' meeting of Taro. And then probably we will look at in terms of how we should take it forward.
Okay. India picked up to 11% growth. This was after 5 quarters of what was a lackluster performance. What is your guidance in terms of India? You're guiding for, I think, high single-digit growth. What do you expect in terms of the India growth? What do you expect going into FY25?
So India business in Q3, you're right, did about 11.4% growth year on year. It's a broad-based performance across various therapeutic segments. Our always aim has been to do better than the market growth. And more important, which we also shared in the call, is that this strong performance is supported by the underlying volume growth when you compare to the Indian pharmaceutical market, where the growth is majorly driven by price.
Okay. Well, margins on an adjusted basis were around 26%. Is this a steady state going forward?
So we are not actually guiding for EBITDA margins. We remain focused on cost efficiencies across the organization. And another important thing is that while expenses of newly acquired business like Concert, others have been consolidated. However, if you look at the last 12 quarters, our margins have been in the range of 25 to 26% plus. And more importantly, our key growth drivers like global specialty business, or you take even India business apart from other businesses, they maintain strong growth momentum, which is overall contributing factor for the resultant EBITDA margins.
Okay. Well, lastly, so, if you could just wrap up this conversation with a guidance on Halol as well as Mohali when it comes to a remediation. Have you heard anything back from the US FDA? What is the timeline of remediation?
So at this point of time, as we shared earlier, we both in respect of Halol and Mohali, we are working on the remediation process and we are waiting for an update from the regulatory authorities. And we will be unable to give any further updates as to when the regulators would come for re-inspection.
All right. And can you give us an update with regards to the Dadra facility? You know, you all did get multiple observations on that site. What is the status of remediation and maybe US FDA action on it?
So as far as the Dadra facility is concerned, it currently remains in an approved status. That's what I can say. And we continue to supply to the market from where the facility used to supply earlier.
Right, that was the conversation that Ekta had with the management of Sun Pharma. The stock up 1.2%. Looking good for the market, though marginally off record highs. Nifty holding around that 22,050 odd mark. Take a short break, come back, get you more on the markets and a bunch of stocks. Welcome back. You're watching us here on Halftime Report. The market is closer to record high, though seen a bit of a pullback courtesy HDFC Bank. So the intraday chart of HDFC Bank comes up for you. And we'll see that, while the Nifty has maintained above that 22,050 odd mark, HDFC Bank is the one which is seeing a bit of a sell-off at the peaks itself. But no real concerns because the market by itself has a lot of strong support coming in from two big heavyweights. One of them is Reliance, which has done well all through January and continues to move higher. And the other one today that's coming back in fashion is the IT pack. Good growth coming in all the tech stocks overnight when it comes to the US and NASDAQ doing well. And with the Fed looking at perhaps a rate cut at some point in this year, most of them hope it is May, and maybe the IT pack also gets in a way out there. So the IT index doing extremely well. We're also seeing a big surge in all the PSU banks and the public sector units itself. So case in point, something like an ONGC, Coal India, NTPC from the PSU energy space, all of them doing well. We have seen PSU banks as well surge. So, PNB, Union Bank, some of the other PSUs, we have the likes of NBCC and SAIL, all of them doing well. But where the Nifty goes from here depends entirely on the Nifty bank. Why do I say that? Because while we've seen and crossed that 22,000 mark, the 22,000 put is extremely active. The bulls believe there's an important support zone. But today's high, or the earlier record high, could face a bit of resistance, because that's where we're seeing a lot of writing at the 22,100 call. For the Nifty bank itself, 46,550 to 46,600 is an important support zone, because you have both the 20 and the 50-day moving average there. The 50-day moving average is what the Nifty bank crossed today, so that'll be an important support. Again, where that goes is all dependent on where HDFC Bank itself goes as the highest weight on the index. But we are seeing strong support from the likes of ICICI and SBI. So the Nifty bank, which is 4% away from record high, along with all the other stocks, all the other indices which are at a record high, we'll have to watch out for that.
Okay, all right. That's what's taking place in the F&O space. But Mahindra Holidays is on our radar today. Managing Director and CEO Kavinder Singh has resigned with effect May 16, and Manoj Bhatt has been appointed. Parikshit is in conversation with Anisha, the Group CEO and Managing Director at Mahindra Group. Parikshit, over to you.
Well, thank you very much. Well, important changes at the Mahindra Group, and they've had this policy of internal rotation over the last few months. We've seen a slew of important leadership changes, even at Tech Mahindra some time back. So let's speak about all of this to Anisha, the Managing Director and CEO of the Mahindra Group. Mr. Shah, give us a sense of the thinking behind elevating some of these internal leaders within the Mahindra Group to key positions.
So, Parikshit, over the last 3 years, we've put a lot of effort into grooming talent. We put in place some marquee leadership programs at various levels and career paths for all our leaders, because we feel that grooming talent is one of our most important priorities. And in that context, we really have a very good set of moves that we've announced today, where our Group CFO moves on as CEO of Mahindra Holidays, a listed entity, one that has tremendous potential. We're going to be investing a lot in holidays. We're looking at tripling the number of resorts that we have, the number of rooms that we have, and thereby going up 5x from a revenue standpoint. And Manoj is very well positioned to lead that. There are a number of very strong leaders in Mahindra Holidays, which will enable strong growth of this business. In addition, we've got Amar Barua joining us as Group CFO, someone who comes in with a very strong background as a finance leader and a strong international experience as well. He was our head of group strategy, and as part of the internal moves, very well positioned to take over as Group CFO. He also has been heading investor relations for us, and therefore very conversant with all of the discussions with investors. We've also announced a few other changes, which include our CFO from Life Spaces moving to Holidays, CFO from Sustain, a solar business, moving to Life Spaces, and we will soon be announcing an internal leader joining as CFO of Sustain as well. So these are moves that are really geared towards grooming talent, giving them bigger opportunities, broader exposure, and that's part of what we're doing in the group, which is to bring in strong talent and to help position Mahindra as the place for the best talent in the industry.
Right. So, Mr. Shah, you are saying that you have an internal program within the Mahindra Group to groom leaders. Even before your appointment, at least 2 to 3 years ahead of that, we had often heard that there was a training program or a mentoring program that was on for at least 50 to 60 key executives in the Mahindra Group. Could you give us a sense of how many leaders, how many senior executives currently are being groomed for future roles, and how is the company trying to do that?
So there, Parikshit, we have a future leaders program, which is targeted to having our executive band leaders move to the strategic band, which is the highest band in the company or across the group. And we typically have about 25 leaders every year as part of our Future Shapers. We will be launching the third edition of it very soon. It's an annual program. It's one that actually is a very detailed one across the entire year, which includes a week at Harvard University and a number of interventions that are targeted to building different skill sets with these leaders, and then continues even after the year is over as we continue to monitor Future Shapers, plan their career paths, have specific interventions from a learning standpoint. The second program we have is MALT, which is Mahindra's Accelerated Leadership Track. And there we've just started the third year of that program. There we've got 30 leaders come in, and these are leaders who are mid-management, who we are preparing for the executive band. And there again, we've seen great success. We have Carnegie Mellon managing a good part of that program for us, but there again, it's a one-year track that continues beyond that. And we are seeing very strong candidates come in, be able to take those roles. And more important than the learning, it's also the career planning we do for them. And the kind of moves we've discussed today are ones that allow for that career plan for to take on broader responsibilities. And as they do that, they get prepared for bigger leadership roles across the group.
Right. So let's just speak about some of these businesses where you've announced these changes. Let's start with Mahindra Holidays and Resorts. You're saying that you're expecting and working towards a 5x a growth in revenues from this business. How do you plan to expand it? What is the kind of growth that you expect in this fiscal?
So we are planning to grow our rooms by 3x, which is the number of resorts that we have. And that will lead to a number of other revenue streams as well, which will result in a 5x growth in revenue. There's a very aggressive plan to look at establishing resorts all across the country. And we have a number of different sites identified. So we are operating at a very, very different pace than we have been before. And I would give Kavinder a lot of credit for setting that up and for setting up a very strong team to take this business forward.
Right. How much would you be investing in this business in terms of capex allocation for the next fiscal?
So more details on that to come, Parikshit. Being a listed entity, I will let that entity talk about it as they finalize the exact numbers over time. All I can say it is one that will have substantial capital that goes into the company. And as we've seen with all our growth gems, there are a number of investors who are willing to put in capital with us as well. So that may be a potential path that we could look at for this entity as well. The demand is extremely high. And most importantly, Mahindra Holidays is positioned extremely well in being able to provide the best holidays for families in India. And the responses we get from our members who go to resorts, we have about 100 resorts in India, is absolutely outstanding on a consistent basis. And our view is that if we can maintain that level of quality in providing family vacations, we can really serve a need that is very strong out there. And we've just seen that that need expand significantly over the last 12 to 18 months.
Okay, and finally, sir, just to ask you about Mahindra Life Spaces, where you've also announced changes. Are there specific plans to increase the business here as well?
Yes, there are. Life Spaces has already seen a significant jump in market cap over the last 12 to 18 months there again. And it has been very aggressive in the market in terms of growing. It's part of our 5x challenge for growth gems. Both Holidays and Life Spaces are our growth gems, and we expect a 5x growth from them in the next 5 to 7 years.
All right. My final question on the auto business. How do you expect to finish this fiscal in terms of your electric vehicle plans? Could Mahindra prepone the launch of certain models?
We will likely be slightly ahead of the plan that we've talked about. And the born electric SUVs that we've revealed earlier are coming together really well. I've test driven 3 of them, and they are just outstanding. So I'm waiting for them to be launched in the market.
All right, we've run out of time, but thank you very much for joining us, Mr. Shah, giving us your outlook for the Mahindra Group, telling us about the key leadership changes and the thinking behind that. With that, it's back to you in the studios.
Right, Pariksha, thanks a lot for that. So that's about the conversation in the Mahindra stable. A lot of strategic changes that the company's made with regards to management. Let's see how the group and the various group companies function from here on going forward. Growth is what everyone is eyeing. Just a word on the market. Nifty has come off considerably from the day's high, about 100 odd points. Still holding up with 220 above that 22,000 mark, with about 322 points in terms of gains. Just telling you the ferocity of the bull run, where we are 100 points off highs, but still holding with a gain of about 322 points on the Nifty. Take a short break, come back on the other side. We have the management of Kajaria Ceramics. Ashok Kajaria joins in to discuss the third quarter numbers. Well, let's get talking numbers. Before that, actually, just pull up the intraday chart of HDFC Bank. The Nifty has broken below that 22,000 mark. So currently at, a 241 point gain. So the gains have been rapidly been given off, and that's largely courtesy HDFC Bank and ICICI Bank. Both those stocks are off the highs, and that's caused that bit of a dent on the Nifty itself. The Nifty Bank is now below both the 20 and the 50-day moving average. Be that as it may, we'll keep an eye out on the markets, but we do have a management waiting by for us. Ashok Kajaria, who's the CMD at Kajaria Ceramics, joins us now. A strong operational performance is what the company has reported. Margins have improved, understandably, largely because of the reduction in fuel prices, gas prices in particular. But revenue growth is still hard to come by. The company has reported 6% volume growth. Thanks a lot, Mr. Kajaria, for joining in. Always a pleasure speaking with you. The smiling face that you have. 6% volume growth in the third quarter. The first 9 months of this year is close to 7%. You're not usually, doing these numbers. You typically guide for double-digit, mid-teens, sometimes high teens as well. What exactly is happening, and what's the revised volume growth guidance for this year and next?
You see, this year the markets have been very tough at the ground level. The last interview I also said, and also I said in my investor review that fourth quarter we should be growing at about 6 to 7% in volume. But we are very optimistic about 24-25. And I think and we have also said that we'll grow 5 to 6% more than the industry. And I personally feel that the 24-25 should be a much, much better year than what we have seen in 23-24, as far as the volume growth is concerned.
Okay. Mr. Kajaria, just a more longer-term question, because the budget was quite focused in terms of housing for the middle class. So there could be probably increased impetus which comes through within that segment going forward as well. What would that mean for a company such as yours? You're expecting you're expecting to exceed industry growth, but in terms of an opportunity, can you quantify it for us?
The budget, first of all, has been good as far as the housing industry is concerned. They are talking about 2 lakh rural housing for the mid sector, as you said rightly. And I feel that the industry next year should definitely grow at, currently the industry is flat this year. The industry definitely should grow at about 5-6% plus. And if that happens, Kajaria will definitely grow at 11 to 12% in volume terms. So it's a positive scenario going forward.
11 to 12% in volume terms in FY25 if all things stay stable. Mr. Kajaria, on the margin front, you maintain this 14 to 16% range. How have gas prices behaved now? The last known numbers that we have, average fuel prices were close to around 38 rupees per SCM in North Southwest, close to 40 rupees in the other geographies. How has the average price been for you, and where is it expected to go?
The quarter 3, the average price for the entire quarter has been around 39. Fourth quarter, we are expecting the same thing as far as the fuel prices are concerned.
And margins stay where?
Last year, if you remember, we had said that EBITDA margin will be 14 to 16%. We are close to about 15.5% for 9 months. And next year, we should end between 15 to 16. And next year, we have given a guidance of 15 to 17% as far as EBITDA margins are concerned.
Okay, all right. 15 to 17% is what you'd probably look at in terms of margins going forward. What are you doing in terms of expansion in order to take more advantage of these possible growth triggers? What is your expansion when it comes to, say, the distribution network? How much you probably putting in when it comes to CapEx?
See, CapEx this year we are spending close to about 370 crores. And as already announced in our results, we are taking a plant at Morbi, which is a glaze rectified plant, for a capacity of 6 million square meters at roughly about 50 crores, which is you can say a distressed sale by one of the companies out there. And if you put up that same plant, it will cost us about 100 crores in Morbi. So we are getting a good deal. We are taking in this plant. And secondly, we are taking a land parcel at about 30 crores for putting up a large slab plant, which should come in about 15 to 18 months. The details of which will be finalized in the next quarter.
And distribution network?
Distribution network, currently we have 1,800 plus dealers, out of which 400 are exclusive. Going forward, we are trying to have more exclusive dealers because the results from them are most positive. So I think next year we should add about another 100 dealers, roughly.
All right. So 100, 150 dealers every year is what you add. You targeted about 10,000 crore revenue in the next 5 to 6 years. That's the goal that you gave to your next generation as well. I just wanted to know, in that 10,000 crore revenue that you have, what will the mix look like? Because right now, most of it comes from tiles, but you are seeding new verticals like adhesives, plywoods, and bathware, sanitary ware as well.
See, what we have given 10,000 crores, yes, we should do it in the next 5 years. We will try not to go even beyond that. But the tile ratio should be close to about 87-88% out of that. And bathware should be about, you can say about 7%. Ply should be about 3%, and adhesive should be about 2%.
And in the very near future, next year, what is the target that you have for allied products?
Bathware, you see, ply we have already said from 100 crores this year, we should be looking at about 150 crores. Adhesive, we are talking about from 50 crores this year to about 75 to 80 crores. And bathware this year, we should close at about 375 to 380 crores. And we are talking about 500 crores next year.
Okay. Based on your trajectory, just before we let you go, I think you're probably going to exit FY24 with over around 400 crores of profit?
Should be. Slightly better than that.
And what would that mean for FY25? Anything that you can guide us on when it comes to the bottom line? You're anticipating 10% growth, 15% growth.
See, we are, as I just said 2 minutes back, if we are looking at about 11-12% growth, manpower is not going to go increase. So gas prices, if they remain constant what they are right now, I think definitely the bottom line will be much better. Bottom line will be much better.
All right. Just the one number that we didn't get from you is the ad spends number. You wanted to spend about 130 to 140 crores in ad spends this year. Next year, what's your target?
Now, this year we are given a guidance, if you remember, about 130 to 140 crores. We'll be doing that. And next year, it will be close to about 3% of our revenue. It will go from what it is this year.
Okay, sir. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Kajaria Ceramics, quite bullish in terms of guidance going forward and demand, the demand scenario going forward. So let's see whether that pans out or not. For the markets, nonetheless, yes, we are off the day's high, but it's been a great week for us. So no complaints on a net basis. We need to take a short break. But up next, we'll connect with Himanshu Baid, who is the MD at Poly Medicure, to discuss their Q3 performance. Stay tuned.
Big budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive.
Welcome back. Well, stable for the markets, so no complaints coming in there. Let's get talking to another company from the broader markets, which did release its numbers a couple of days ago. We have Himanshu Baid, who is the MD at Poly Medicure, who joins in to discuss their performance. Mr. Baid, thank you very much for taking the time out. Well, you do have your investor call this evening at 4 p.m., so we don't have those takeaways with us. So we want more data in terms of how exactly the performance was for you this quarter. Revenue growth was up around 19% this time round. Can you start by breaking up what exactly the domestic business did as well as the exports?
So thank you very much. So export grew by around 23% and domestic grew by around 17%. So that was the breakup of the revenue between the two businesses. And if you see overall 9 months, we have done a growth of around 23%. So that was as per the guidance we had given in the beginning of the year. We had changed some guidance after Q1 numbers because we could see a more upswing in the export revenues. And I think that's where we are.
So what does that mean for your full year guidance? Because you did, like you mentioned, you did change, you revised your guidance upwards. But what are you closing the year with? Are you probably even more optimistic at this point in terms of an exit run rate for FY24, both in terms of revenue as well as margins? I think your revenue, you were estimating 20 to 22% growth. 9 months, you've done 23%. Margins, 25 to 27% is what you've guided. You did around 26%. Where does that stand? Are you probably looking to stick to it, change it?
I think we are going to stick to that number, be very close to that number. I think the most important thing right now is the disruption which is happening in supply chain globally. And I think that Red Sea crisis is kind of delaying shipments out of India to our core customers in Europe and in Americas and that Middle Eastern market. So I think that is a little bit of worrisome, but I think overall we should be in the range which we have guided initially.
So margins at 25 to 27% and revenue at 22 to 24%, right? Okay. I just wanted to know your thoughts on two things. One, you said that from October 1, non-regulated exports from China reduced, and this is with regards to your renal business. So now you have had 1 full quarter of no, pressure coming in from China. How has that business panned out, and what is the likely scaling of or scalability of this business from here?
So in Q3, we have grown the renal business by around 28%. And I think as time progresses, we will see more and more increase. For FY25, we think we should be able to grow this business by between 40 to 50% now, because with more regulation kicking in, I think this business will also stabilize for us. And we are more optimistic in next couple of financial years.
On an absolute basis, what would this number look like, both renal and dialysis business?
So it's a combined business, so it's one and the same. So I think in absolute numbers, we should hit around 90 crores this year. And I think going forward next year, between 140 to 150 crores.
Okay, 90 crores. What about your critical care business? When are you launching that?
So critical business care we have launched, already done a soft launch for that business the last quarter. And our cardiology business we're launching this quarter. So again, we are doing a soft launch, and I think we'll go for more aggressive launch maybe in the next financial year.
Did you make any money from the critical care business this quarter?
Well, we don't track like that because it's a very small business just to start. So I think as time progresses, because again, critical care products will have more margin as we go forward. So I think that they'll kick in more in the next financial year.
The US, you did indicate that, supplies have started. Did it contribute to sales this quarter?
So the sales are probably very less right now, but I think it's a build-up phase. We've got also received 2 new approvals also, 2 new FDA approvals, and it's just a build-up phase. So we are, I think hopefully next financial year, we'll see more higher revenues coming in, and there are a lot of products under pipeline right now under FDA approvals. So it's just a build-up phase. We've just started. So it's not going to kick in immediately, but we are in a build-up phase.
So, but we've spoken about the US business multiple times now, Mr. Baid, and it's always been in this gestation phase where there are approvals, we're in that build-up phase. When can we start seeing numbers come through when it comes to the US?
See, we initially, if you remember, we had said 3-4 years we're going to build a $15-20 million business. And I think we are pretty much on track because it takes a couple of years for approvals first. And we only started in 21 to start applying for FDA approvals. We got approvals only last year, or September, October, and that's how we started building it up. So we already have contracts in place, the customers are in place, and the product pipeline is already ready. New manufacturing lines were set up for the US business. So everything is on track to deliver that growth and that number.
So strategically speaking, what's your US target? I mean, what proportion of your revenue should you get from the US, say 3 to 4 years from now? And even the critical care that Ekta was talking about, right? What is your revenue target here? At what scale do you start making money?
The critical care business, I think we'll start making money immediately because this is an extension of our infusion vascular business. So I don't think we'll have any gestation period there. See, in medical technology, it's not that you start getting business on day one. You need approvals from every hospital, every clinic, every doctor. So it's a slow process. And once you get the process right, then the demand starts kicking in. So we are in that phase of building the demand and setting up the lines for ramping up the capacities. So we're in that phase, but everything is kicked in already. The expenses have kicked in already. The hiring has already been done. People are in place. So everything is part of the current P&L. And we continue to do better and better. We'll continue to do better and better only.
Can you just guide us on what the growth rate would look like for both of your markets, domestic as well as export? Because your export grew faster than domestic. Are you expecting that kind of trajectory to continue going into Q4 as well as maybe FY25? And why is that?
So, so I think in Q4, we expect a similar growth rate of 23% and 17-18%. But I think next year, as new businesses kick in, our critical care and our cardiology business, and renal will show a more remarkable increase. So then we see domestic business also growing upwards of 20% in the next financial year.
All right. Thank you so much.
Export should do a similar number, maybe 20-22%.
Okay, so not only have you given us the guidance for this year, you've also given us a bit of an aspirational target for the next year where your overall business grows between 20-21%, given that exports grows at 20 and domestic between 21 and 22% itself. Himanshu, thank you so much. Always a pleasure speaking with you. With that, we'll take a short break, come back, focus on the markets. Markets are off the highs now. The Nifty closing in on breaking below that 21,900 mark too. And that weakness is led entirely largely by the Nifty Bank, which is now sitting with a gain of just about 250 points. Take a break, come back.
Welcome back. Well, we've been pointing out that there has been a little bit of a shave off for the market. So the Nifty is still up around 195 odd points, but it's off that 22,000 mark. We also have the Sensex, which is up around 603 odd points. The overall advanced decline ratio is looking good, so no complaints coming in there. We have PSU banks which are firing away today as well. So for example, Punjab and Sindh Bank is up around 15 odd % at this point in time. Nonetheless, let's talk about a couple of companies then. Dr. Lal's is in focus on account of its numbers. It did hold its conference call last evening. In the conference call, the company did indicate that they have acknowledged that the recovery in the non-COVID-19 volumes is underwhelming in recent quarters. The company didn't guide for an FY24 top-line growth. They remain confident of maintaining margins around the pre-COVID-19 levels. There are no immediate plans to take price increases. They will use other levers when it comes to growth. Goldman Sachs has remained its sell called on the stock with a target price of 2,200. They believe subdued volume growth trend continues. Core business reported low double-digit year-on-year growth. Patient volume growth remains meaningfully below pre-COVID-19 levels. Emergence of credible competition will lead to a structural decline in volume growth, according to them. UBS has a buy with a target price of 2,950. According to them, the company is investing for future growth. Street likes to measure volume growth in the number of patients, but the rising number of sample growth is becoming a better reflection, according to them. And Dr. Lal's is growing in mid to high single digits within that segment. The company is investing in the form of bundling of high tests and also expanding in tier 3 and 4 cities. So that's on Dr. Lal's. It's a little under pressure today, down around 1.3%. We'll do one thing. We'll take a break, but we'll get you more stocks on the other side. Stay tuned. Welcome back. Well, just a couple of other stocks to point out. Abbott is in focus on the back of its very good numbers this quarter. Revenue was up around 9 odd %, but the margins expanded all the way to around 27% versus 24%, and the profit was around 311 odd crores versus 250 odd crores. And Q on Q as well, the margins have expanded around 200 basis points. So good going for Abbott this quarter. But we need to wrap up on the show with the news that the Bank Nifty is up around 263 odd points. We have the Midcap index, which is up around 0.6%, and the Nifty and the Sensex holding up with a gain of almost 1%. It's a wrap on the show. Business Dance Shop.
Stocks swing back strongly to lead the Nifty to record highs, with gainers significantly outnumbering the losers today. Even as the market corrects from the day's high, power and realty stocks lead the charge, while FMCG and healthcare bring up the rear.
Strong sales across the auto industry. Two-wheeler companies like TVS, Bajaj and Hero see 23 to 25% growth in the month of January.
The Paytm management in a call tells analysts that it hopes to shift all businesses from Paytm Payments Bank to other banks soon to ensure continuity of operations. But no clarity on the cause for RBI's strictures spooks the street today.
And Castrol gains on a sharp uptick in margin. Bata India too sees profitability jump, but a sharp cut in margins hurts RITES India.
Hello and welcome. You've tuned into Business Lunch on this Friday afternoon. I'm Nisha Podar. With me, as always, is Pavitra Parekh. So, Pavitra, finally, final day of this particular week.
What a long one.
What a long one with so many events and so many really news flow to really digest from. And some of them are having their huge impact today. But all in all, it's been a fabulous day, a record-breaking day for the market. So let's take stock of that. Of course, Nifty 50 is off the high point of the trading session and the records that it hit, but still holding on with almost 1% of gain. So let's take stock of the market at this point in lunch hour today. Still fueled up, 21,900 level on Nifty 50 with over 200 points gain at this point. Sensex 2 gains over 600 points. Bank Nifty, that is showing slight underperformance to the key indices, but still holding on good with over 0.5% gain. And so is the case with the Midcap universe. So all in all, the screen is looking extremely green and buoyant today with more advancing stocks. And that's not a surprise coming in. So there is market strength really building in. Some of the counters like BPCL, Power Grid, ONGC, NTPC, so all PSU stocks are really roaring in trade today, and some of the big heavyweights are putting a lot of might behind the market momentum. Eicher Motors, HDFC Life, Hindustan Unilever, and a couple of banks like Axis Bank, HDFC Bank are the laggards in trade. Pavitra.
Well, you know, you absolutely said it. The PSUs are where a lot of the action is and where it's sustaining, whether you look at the large caps or in the broader markets as well. The Nifty CPSE index is up almost 4% today, if 3.5%. If you look at it for the week, it's up 8.5%. That is the kind of force that you're seeing in this entire pack of stocks. So the large caps, of course, it's, include BPCL, ONGC, and you have a few more Power Grid as well. But I do want to mention that there are a lot of others which are surging on this budget news as well. So names like SJVN, NHPC are seeing a big move higher. You also have a lot of stocks reacting to their earnings on the upside. So names like Castrol, Abbott, all seeing a very good move. And, speaking of PSUs, I just want to mention that some of the banking names, the smaller banking names, are just having a completely solid session. So Punjab and Sindh Bank, PNB, Bank of India, all of these seeing a good move higher. I will mention that the pullback that we are seeing has been, concentrated in some of the larger names. So you have names like, some of the larger banks. So HDFC has pulled back quite a bit. ICICI Bank around 1.5% from the highs. Reliance is still holding up quite well, but it has slipped from the highs, which is why you're seeing this kind of move on the index. What's under pressure? Of course, Paytm and a lot of the railway stocks that have been running up, in addition to some of the consumer names that Nisha was mentioning. So that is what's going on with the market. We will keep talking about this, but let's kickstart the show by talking about Paytm, because shares are locked in a lower circuit for the second straight day. And this after the RBI imposed major restrictions on Paytm's payment bank. Paytm has said that this will result in an annual EBITDA hit of 300 to 500 crore rupees. And the founder, Vijay Shekhar Sharma, has called this a big speed bump, but he thinks that they will be able to navigate this. So let's actually listen in to a small piece of that conference call where he was addressing analysts.
Going forward, the keyword is that we will not work with Paytm Payment Bank, and that is what probably means that other banks will come. Paytm, I can say that it is more of a big speed bump, but it is something that we believe that with partnership of other banks and capabilities that we have already developed, we'll be able to see it through in next few days or quarters, as the case would be.
All right, so that's the word really coming in from Vijay Shekhar Sharma after the big news on Paytm. And take a look at this particular stock. There's no let up in sight. It's 20% down since the opening of the trade today. In fact, our colleague Ritu Singh had really attended that particular con call and gets us all the key highlights and the understanding of way forward from here. Tell us, Ritu.
Well, Nisha, in terms of way forward, there was actually little from the management yesterday on that hour-plus long con call, and I think that's why you're continuing to see pressure on the stock even today, down 20% yesterday, down 20% again today. The big takeaway from the con call really was that, one, they're already starting to work with other banks because of the embargo on Paytm Payment Bank to ensure that there is business continuity when it comes to the other functions of Paytm, that they're immediately starting to comply with RBI directions, although, be very clear that RBI has not indicated in any manner whatsoever that if Paytm were to comply, they would lift the embargo. So that wording itself was missing from the notification that, of course, RBI had publicly disclosed earlier. They said they're continuing to decrease their dependency on Paytm Payment Bank. Vijay Shekhar Sharma calling this a big speed bump, but one that they will be able to navigate in the coming few days or quarters, he said. How, it remains to be seen. As far as, the reason for the action, which several analysts asked him through the course of the con call, the management maintained that, there have been some compliance issues, which RBI has publicly stated as well in the notification. But beyond that, there's been no further engagement with RBI on this matter. Another important takeaway is the management saying that there will be a temporary hit on the lending part of the business for now. Remember, the payments bank itself cannot lend. It only facilitates transactions. But the lending is done in tie-ups with other NBFCs, etc. That may take a hit for the next couple of weeks, where we'll not be originating any new loans. Other than that, businesses remain unaffected. But really, we'll have to see when the embargo lifts, if at all it does. No visibility yet on that part of the hit on the business, even though the amount is about 300 to 500 crores.
All right. Thanks so much, Ritu, for putting all that into perspective. So uncertainty on the way forward and very little information on that is something that is really spooking the market. Looks like a deja vu. The stock is not too far away from their all-time lows and looks like the kind of crash that we had seen on the listing day as well. So a lot of roller coaster ride for the investors in Paytm, which is a fairly newly listed company from the space of the new age companies. So next up, also let's figure out who are the investors that are invested, the mutual funds who are really taking this beating because of the news developments at Paytm. And Pavitra tells us more about that.
Nisha, you were mentioning the stock price is down 40% in 2 days, 77% from its IPO price. But if you look at the mutual fund action, they've been picking up stake in Paytm. So right now, 68 schemes are, have exposure to Paytm. The total amount is around 2,000 crores. It's not a big amount, but if you look at, just the move in terms of allocation between September and December, it's gone up by 77% for the mutual fund industry. Allocation is higher in active funds than the passive funds, and some of the larger exposed funds will come up for you. So what has the highest exposure? It's the UTI Innovation Fund, around 4.8%. You then have two of Quant's funds, Nippon and Mirae also factor in that list. So that is the exposure of active funds. Let's also look at the passive side. Here, the maximum exposure comes in from the Tata Nifty India Digital Fund. It's at 2.9%, and some of the others between 1.5% to 2%. Now, I just want to go back to the allocation that we were talking about. The total mutual fund industry, exposure to Paytm in December of 2022 was just around 1.73%. It has gone up slowly. In September of 2023, it went up to 2.8%, and then you can see that big jump come through on your screen. And in December 2023, it's at 5%. This is the highest that it has ever been. Let's further look at the December quarter, because the big jump again comes in the month of December. So it was at 177 crore shares in the month of September, and then by the time we got to December, it was at 315 crore shares. So that is the kind of exposure that the mutual fund industry has. The number is not big, but it has gone up very significantly in the month of December.
That's right. The mutual fund industry has been ramping up its stake also because, Pavitra, a lot of venture capitalists has exited, and there were a lot of block deals after the lock-in periods ended. Yeah. So that's also a reason, a large supply and the institutions buying it. All right, moving away from Paytm, which is our top story for today. Next up is Indian Hotels, which is higher in trade on the back of its strong Q3 numbers. And Manglam Malu is right here with all the details on that. Tell us, Manglam.
Well, extremely extremely strong numbers coming in from Indian hotels, a record revenue, record margins, record EBITDA and record net profit as well. And it was expected to be so. But what interesting is that the company's targets for next year are equally strong. They've looked at double-digit consolidated revenue growth in the next year. And if you add to that the new hotels that the company is adding, the revenue growth could be over 30%. They're targeting more than 2 hotels to be added every month. And they have strategic cash reserves as well of almost 1,800 odd crores. They will be launching new hotel brands in Tier 2 and Tier 3 cities. Ginger brand itself could be more than 600 crore worth revenue generations in the next 1 year, along with Taj Sats, which is their air catering business, which could cross that 1,000 crore mark in terms of revenue too. And they would see good growth coming in their new verticals like Cumin as well as AMA or AMA Homestays. Let's also hear out what the management had to say to CNBC after the results.
We have opened 16 hotels this year. We have a pipeline of 85 hotels. We are well positioned to achieve 20 hotel openings this year and going forward a minimum of 2 hotels a month in the coming 3 years with the pipeline that we have of 85 hotels. And most of that is on a fee-based business, so it balances our portfolio with the asset heavy and asset light with the guidance that we have given. With the new scheme of the government of building 50 new airports, we'll also need new hotels. So I think all in all, the whole cycle of, doing the business with the airlines, with the airline passengers, with the meals in the air, all this is going to grow at a very rapid pace in the next decade, I think.
This is the word coming in from the Indian Hotels management, but we are going to get into a short break now. On the other side, we are going to focus on Tata Motors and SBI. They're expected to report Q3 earnings today and tomorrow, so we'll get you the key expectations when we come back.
Big budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive. The big budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive.
This lunch, by the way, the market has pulled back a little bit more right now. It's down 280 points from the highs of the day on the Nifty. So 1.3% gone. They were holding on with just a 0.7% gain right now. And it is the banks which are pulling through. The Nifty Bank Index is completely flat right now. So it's given up a lot of the morning gains. We'll talk more about the market. But first, onto the macros. And this is some important information that we're getting. The government's market borrowing will be lower in FY25 as the government prepays GST loans from compensation cess. So Sapna is here to tell us more about this. Sapna, what are you picking up?
Yeah, hi. So basically, the intent of the government is very clear, and the numbers are all out in the budget. Secretaries and the finance minister has dwelled on them in detail yesterday. just to put things in a perspective, so market borrowing for FY25 after a very, very long time is actually on the lower side. It's, I think, almost a lakh crore lower than the numbers for the current financial year. That's the big one we talk about. So what we have also been given to understand is a major reason for that is the fact that the government will not be depending on market borrowings to, basically pay back the GST back-to-back loans, which had been transacted by the central government on behalf of state governments because of the GST shortfall that had happened in FY21 and FY22, and that's a big amount. Just to put things in a perspective, 2.69 lakh crore had been borrowed. Now, because of the revenue surge, what's happening is the government is now prepaying those loans. And that money is going from the own cess compensation collection, which again for next year is a massive 1.5 lakh crores on the back of excellent GST numbers which have been coming in. And similarly for our current year also, 1.45 lakh crore is the GST compensation thing. So just to put things in a perspective, they are not depending on market borrowings. This entire prepayment is happening from their own funds. It's not being taken from the consolidated funds. The cess is taking care of that. And consequently, the benefit is basically lower debt implications for state governments, lower borrowing costs, and the fact that it's a right signal for the markets which has to be taken on board.
All right, Sapna, thank you so much for all those important details coming in on government's borrowing program for this particular year. All right, moving on then to earnings, and big boy from the banking space, State Bank of India is expected to report its Q3 earnings tomorrow, and Abhishek is here with the expectations on what could we expect for this quarter from SBI, which is today up in trade over 1%. Abhishek, tell us.
Watch out for the net interest margin. Our polls suggest NII growth on a YoY basis to be the weakest or the lowest in last 10 quarters, and profit growth for the first time on a YoY basis may decline or see a negative return. So the key thing to watch is that they will have a one-off with respect to wage provisions which will be made in this quarter on account of the wage revision rate that's been done. Net interest margin can be under pressure. Analysts estimate net interest margin to decline anywhere between 18 to 20 basis point YoY and about 5 to 8 basis point on a sequential basis. Loan growth is seen at around 14% YoY and about 4% sequentially. So loan growth sequentially can be on the stronger side. Slippages expected at about 5,000 crore as per ICICI Securities estimate. This was about 4,100 crore in the previous quarter. So no hiccup in terms of slippages seen. Asset quality expected to remain stable or improve. Motilal Oswal expects gross NPA ratio to be at 2.4% versus 2.6% in the previous quarter. Now, the treasury income could be weak. This can impact the operating profits. So, Kotak Securities estimate operating profit decline of 18.3% YoY, but it may be up about 6.2% sequentially as per Kotak Sec. Management commentary with respect to growth outlook will be seen closely. Our polls suggest NII growth of just 6.3% YoY and 2.2% sequentially. We are working with a profit decline of 5.9% YoY and about 7.5% sequentially. Back to you.
All right, Abhishek, thanks a lot for laying out all of those estimates for SBI. We are going to watch for those. That is the big earning, which is, of course, due tomorrow. We need to get into a short break now. But on the other side, the US takes action against Israeli settlers accused of violence against Palestinians in West Bank. So we're going to bring you all of the details on that story when we come back.
Budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive.
All right, on Business Lunch, let's focus on some of the important global developments of the day. And let's get you the latest from the ongoing tensions in West Asia. Hamas is continuing to weigh in a ceasefire proposal as diplomatic efforts for a truce in Gaza ramp up. Meanwhile, President Biden issues an executive order targeting the Israeli settlers in the West Bank, accused of violence against the Palestinians there. NBC's Matt Bradley reports on the on-ground developments.
Two twin initiatives by the Biden administration on the topic of Middle East peace, and both of them are going to be seen here in Israel by Prime Minister Benjamin Netanyahu's far-right cabinet. And this is the cabinet that has been considered the most far-right in the history of Israel. It's going to be seen as a broadside against Israel. It's going to be interesting to see how these are received. The first initiative is an executive order. It announces punishments against those Israeli settlers who harass or use violence against Palestinians. Now, we've already heard from the finance minister, Bezalel Smotrich, who is a settler himself, saying that this is essentially an anti-Semitic canard, the whole idea of settler violence against Palestinians. Now, that is certainly not true, because we've seen human rights groups reporting on this, and my own colleagues here at NBC have done multiple reports where they've seen this in person, harassment of settlers against Palestinians in the West Bank. The other initiative would be possibly recognizing a new Palestinian state. That's something that has been in the works for multiple administrations and something that has eluded many presidents who have tried to do it in the past. That's because of resistance on all sides. And this is going to be a hugely ambitious initiative, especially if it's put before some sort of peace agreement is in the Gaza Strip. And of course, the Israelis are still pushing their effort to completely destroy Hamas, but empowering the Palestinian Authority, especially under new leadership. Now it's been led by Mahmoud Abbas, who has been in power for more than 10 years and has not faced elections in most of that time. He has well outworn his mandate. This will mean it entirely reinventing the Palestinian Authority, which now doesn't have authority over the Gaza Strip or many places in the West Bank. So again, we're talking about twin initiatives here, both of which seem to be siding with the Palestinians, both of which are going to meet massive resistance from here in Israel, from Benjamin Netanyahu's cabinet, and maybe even from far extremist Palestinians like Hamas, who are still very much active in the Gaza Strip, despite Israel's best efforts for months to try to unseat them from power.
All right, that is the latest from the conflict in West Asia. We're going to keep bringing you more on this. But for now, let's shift focus to Jharkhand, where Champai Soren has taken oath as the Jharkhand Chief Minister after Governor C.P. Radhakrishnan nominated him for the post. This comes after the ED arrested former Jharkhand Chief Minister Hemant Soren in a land fraud case. The Supreme Court refused to hear a petition filed by the former Chief Minister challenging the arrest. We have CNN News 18's Arunima, who's joining us with the latest.
It's a setback for Hemant Soren. He had gone to the Supreme Court challenging his arrest by the Enforcement Directorate, but the Supreme Court refused to intervene, saying you should have gone to the High Court instead. So now Soren will have to go back to the Jharkhand High Court, the Ranchi High Court, trying to argue that his arrest by the Enforcement Directorate under the Prevention of Money Laundering Act is unlawful. Meanwhile, the Enforcement Directorate is also hoping that Hemant Soren's custody of 10 days, as ED had requested, would be granted. The Ranchi Court, the special court in Ranchi, had sent Hemant Soren for 1 day's judicial custody, even though ED argued that they want to question him and confront him with a lot of evidence, and 10 days is required for that. So what is the evidence that the ED is talking about? They have told the court that they have crucial evidence in terms of recovery of chats and photographs from the mobile phone of one of the accused, Bhanu Prasad, in which it is clear that this former circle officer was in conspiracy and connivance with the then Chief Minister Hemant Soren. It also claims, the ED claims, that the Chief Minister's office sent him instructions to change land records in a fraudulent manner so that protected tribal land, protected defence land can be acquired by the Hemant Soren and his aides. 8.5 acres is what Soren stands accused of procuring wrongfully as part of this huge conspiracy. What the ED has also said is more than 36 lakh rupees recovered from Hemant Soren's Delhi residence could be proceeds of crime. They have mentioned in the court documents that they want to ask Soren what this cash amount was doing in his bedroom's cupboard here in South Delhi. So 10 days is what ED has asked for. It claims it has huge evidence against the former Jharkhand Chief Minister.
All right, thanks, Arunima, for that. Completely out of time on this edition of Business Lunch. Midcap Radar comes up next. Thanks so much for tuning in.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Putra. With me is Pavitra Parekh. Looking good for the markets, Pavitra, and it is a day where we hit another record high, right? At the 22,126 mark. It has come up sharply from those levels, around 300 points from the highs of the day. But there's nothing that we can really complain about. But it's the banking index which is leading to the pressure that we are seeing. That is the one which is underperforming right now, is in the red. If we get the bank Nifty up for you, it is at the day's low and something that is putting some pressure. The other pockets continue to do well. Let's talk about the CPSE index. That's up around 3.5%. The energy index is up around 3%. So there are a couple of pockets which are doing well, but the pressure that we've been seeing on banking, that continues.
Oh, absolutely. And it is once more HDFC Bank, which has seen a almost 2.5% fall from the top of the session. So that one is pulling the index lower. You have names like Axis and ICICI also, which are sharply off the highs. You also have Reliance, which has come off the highs quite a bit. So, you know, these kinds of large weights is what actually took the index to all-time high levels. And it is what is bringing it a lot lower as well. Advanced demand decline is almost neck and neck now. So you do have the broader markets also which have pulled back quite a bit. So the Midcap index is now only 0.25% in the green, and you have seen a similar move come through in the small cap index in terms of just a fall from the highs. But there is still a lot of action coming through, a lot of stocks reacting to, you know, what was announced in the budget and also, of course, the earnings. So we have Vivek here joining us now for our special Midcap Mover segment. Vivek, take us through what's really moving around.
Well, absolutely right. Been quite volatile intraday. You know, you did see quite a bit of the gains being given up. But we have to focus, you know, on the power space, the infra space, you know, the OMC space, and like Sonal mentioned, you know, the entire PSU pack. Have a look at some of the names here. NHPC, LJBN, fresh lifetime highs. These stocks have already outperformed in the year gone by, continuing their up move. MRPL, you know, even within the oil and gas space, this particular stock another 7.5% higher. And NBCC today up on very good volumes, up over 13.5%. The next set of stocks, you know, stocks that we're looking at on the back of very strong volume-backed action. Have a look at PNB. You know, the stock moved higher even in the week gone by. Yesterday it was up quite sharply, and today up another 4.5% on good volumes. Within the mid-cap IT space, Cyient today up, you know, ending quite a bit of underperformance, up 6.5%. Canfin Homes and NMDC, these are the other two stocks that are doing quite well in the session today. But on the other hand, some of the stocks that are reacting mostly to a set of mixed or weakish results. HFCL down over 5%. India Bulls, after going ex-right, you know, the stock has seen quite a bit of selling pressure. And Cholamandalam Fin, you know, this particular stock, after the results had seen a couple of downgrades, has corrected quite steeply from the recent highs.
Okay, all right. Thank you so much, Vivek, for joining us as always and giving us a sense of the broader market movers as well. Let's talk about one of the broader market movers now. Balaji Amines is the stock on our radar. Company reported what was a weak earnings in the quarter gone by. There was a YY decline. However, we did see a sequential improvement in numbers, and that is something that we'd like to understand whether it's an improvement in demand or is it a one-time thing. D. Ram Reddy, the MD of Balaji Amines, is joining us now. Mr. Reddy, good afternoon. Thank you so much for joining us. As I was pointing out, you've seen a decline in EBITDA in profits on a YOY basis, but there has been a sequential recovery. Margins are up 530 basis points on a sequential basis. Give us a sense of whether this is led by improvement in demand, have volumes come back, and is there some improvement in pricing as well?
Yes, I can say that we are back on the track. If you look for the quarter-to-quarter basis, the margins improved from the EBITDA from 12% to 16% to 21%. The last quarter, we have done only 16%, and now this quarter is about 21%. As regards the revenue, yes, because of the prices have come down, raw material prices, even finished product prices have come down, you will see the declining the revenues. But if you talk about the 9 months consolidated basis, standalone basis, we have done 70,000 tons volume when compared to the 67,000 tons. So this shows the improvement in the offtake from the market around the world. And we feel that in coming quarters, it should be improved from the quarter-on-quarter basis. And as regards to some of the expansions, as I said in earlier, we are in the track. That one plant that butylamine we just commissioned the last month only, and methylamines is on the track. Construction is going on, and dimethyl ether is going on, and we are looking for the DMC electronic grade. We are upgrading the existing facility, and we're also coming up with the 20 megawatts solar plant to balance the carbon footprint. So these are the expansions. Even in the subsidiary, we are talking about the new product mix with the 80 crores expansions coming up in the coming 1 or 2 quarters. And we're also talking about the new expansion that about 750 crores in the unit 2 of the subsidiary also on the table from the phases manner. We will see in the coming quarters spending the money on these expansions also.
Hi, Mr. Reddy. Thanks for joining us today. You know, we have a lot of questions on the expansion plan, so we'll get to that in just a bit. But you are saying that, you know, demand is improving. So what kind of volume growth do you think is sustainable? And on the pricing that Sonal was asking you, has there been an improvement? And if yes, what is the quantum of that improvement that you've seen in terms of the pricing?
In 9 months, we have seen more than 5% volume growth. And there's a 4 to 5% minimum improvement in margins on the EBITDA basis if you see the quarter-on-quarter basis. So this shows there's an improvement in the market. Going forward, definitely there should be some improvement.
Okay, so what my colleague is also trying to understand is because the industry has been facing a lot of pricing pressures, there have been inventory drawdowns. Are you saying that there's a bottoming out of prices from here on and we'll only see improvement? Are we seeing demand come back in major sectors like pharma for yourself?
Yes, there is an improvement also. There is improvement in the margins also, because in the earlier quarters we have seen the pressure in the margins because of the China and all. They were just destocking the inventories. That was a major concern with all the companies, including Balaji Amines. But the last quarter we have seen the improvement in the margins. So I think it should carry forward. Going forward, there should be improvement. They should continue with this improvement.
Okay, the margin improvement should continue. Let's also talk about the exports. I believe domestic to exports is around 85 to 15%. So can you tell us how the exports growth is panning out, and do you plan to increase exports from these levels, or do you want this kind of split to remain?
Yes, we are targeting more than 25 to 30% should be our target for out of the total revenues for the exports.
By when?
Last quarter we reached up to 17 to 18%. We are just gearing up to the new product lineup. There should be minimum 1 or 2% growth in the exports in the coming quarters.
Okay, all right. So export will be a key driver going forward. You spoke about this new plant that you commissioned in the month of January, that is butylamine. When will it reach its peak? What is the current capacity utilization? And once it does, what kind of revenue contribution will it do?
You see, before the end of 2025, we should be in a position to commission 2 major plants. One is the methylamine plant, about 40,000 capacity. And there's a product called dimethyl ether. Again, first time in the country, we'll be establishing about 100,000 tons capacity, which will be commissioned by the March 25. And along with this, there's a power plant, solar power plant coming up with 20 megawatts, which will take care of our entire power.
Yes, Mr. Reddy, you did. Yes, you did mention, if you can quantify that, because those details are available in the investor presentation. What will the financial impact of all that be? The recent butylamine plant, once it gets fully commissioned, the other 2 plants that you're talking about, and also the solar power, how much will that reduce costs by? If you can give us a number to that.
See, with this run rate, we should be in a position to complete minimum 17 to 1800 crores annual turnover for the current financial year. I'm talking about the March. The next financial year, we should be touching about 2,000 crores with these raw material prices and finished product prices. But 2026, we are targeting minimum 3,000 crores annual turnover with all these expansions going forward. And the EBITDA margin should go up to 22 to 24% once we finish all these expansions, including the solar power and all. We should touch minimum 24% EBITDAs.
Okay, all right. So that is something that your investors would like. Last question before we let you go. Any plans on your subsidiaries IPO? There's been a lot of to and fro, a lot of things happening in the market, forwards going ahead. So we would like that clarification from you itself. Will it happen in this calendar year?
No, I can't say that. We don't have anything on the table right now. But definitely, we are doing a lot of activities in the expansion. As I said, Government of Maharashtra has given a mega project status for the 750 crores expansion, for which we already acquired the 100 acres, 80 acres land. And that land digging will take place once the environmental clearance comes. Probably you will hear more in the coming financial year, more about the activities in the expansion and even the IPO also. You can IPO or maybe merger, whatever board takes decision will come in the next 2-3 quarters.
All right, Mr. Reddy, we leave it at that. Thank you very much for joining us and taking us through the outlook for Balaji Amines as you see it today. That is the management. We are going to get into a short break now. On the other side, we will have Ramesh Nair, CEO of Mindspace Business Park REITs, who will talk to us about their Q3 earnings and how they really see the outlook. Welcome back. You're still tuned into Midcap Radar, and we have a lot of earnings to really tackle. So let's talk about Mindspace Business Parks REIT now. Q3 was quite a decent quarter for the company. Saw pretty good revenue growth and operating income. Their rent, if you look at it on a year-over-year basis, has also increased by around 5.4%. We have the management joining us. Mr. Ramesh Nair is CEO of Mindspace Business Parks. Mr. Nair, thanks a lot for joining us. This is Pavitra. I just want to begin by understanding what your occupancy rates were like across Q3 and where does it stand right now?
Thanks, Pavitra, for having me on your show. We just declared our third quarter results. Our NOI grew 10.4%. Our revenues grew 13.5%. Coming to your question, our occupancy today is at 86%. Which means our vacancy is at 14%. But one thing which needs to be noted about this 14% vacancy is that 83% of this vacant space is in special economic zones. And out of this 83%, 86 of this can be flow-wise denotified. This is a new rule change which came into effect last month. This is a significant policy reform which will be a game changer for all SEZ developers. 2-3 other things to be noted. Our LTV is at 21%. Our total leased area is at 33.1 million square feet. Our in-place rent, which is today at 68, but in the last quarter, the leases we did was at 78%. That's 14% more than our in-place rent. And we have a lot of assets which are coming in the pipeline over the next 3 years.
Okay, all right. So you do have a lot of assets in the pipeline. Mr. Nair, I wanted to understand about the SEZ denotification or the notification that came denotifying the floors in the SEZ space. How much of it do you think will get occupied in this calendar year itself? And does it mean higher rentals in SEZ as well? Because this is something that the industry was waiting for a long time.
So there is nearly 37 million square feet of SEZ space which has been lying vacant for a while. So previously, a few years back, demand for SEZs used to be like 50% of the overall demand. That 50% dropped to around 10% of the overall demand. So 90% of the demand was for non-SEZ spaces. So we thank the government for this long-anticipated SEZ reform. It's a big boost for the commercial real estate industry. This is definitely going to bring in more tenants into SEZ spaces and also boost economic activity within the SEZ spaces. But one thing you need to, again, I'm repeating it, is out of all the space which is lying vacant today, for us, 83% of it was SEZ. And this new rule change is going to help us unlock these spaces.
So how much of that do you expect to be unlocked in calendar year 2024 itself? That's what I wanted to understand, to give us a sense of how much will vacancies reduce by in the coming quarters.
In the next 4 quarters, I'm talking about financial year 25, we hope to bring these vacancies down by around 35 to 40%.
Okay, that's good to hear. The vacancies can come down by around 35 to 40%. Let me just go back to the rents, which I was mentioning have seen around a 5% rise on a year-over-year basis. Just tell us, where do you see this going? Because there isn't much fresh supply coming through. So do you think that rents are set to increase at a steady pace from here on? And how much of an increase would you pencil in?
So if you look at SEZ spaces, I don't see the rents going up significantly because like I said, there are close to 37 million square feet of SEZ spaces lying vacant with all the developers. So that's going to hit the market. But non-SEZ spaces, we believe rentals would go by around 4 to 6% per year.
Okay, 4 to 6% would be the non-SEZ pipeline. What is the pipeline for Mindspace Business Parks REIT, Mr. Nair? Will you look at expanding it via organic pipeline way, or will it be inorganic? You would be looking at some smaller assets?
So looking at both organic and inorganic. Organic, we are building 4.4 million square feet, mostly in Hyderabad and Pune. We have a new building coming up in Pune, what we call it the R2 building. That's going to add around 95 crores of revenues. In 26, we have a building called the B1 in Hyderabad. That's going to add around 125 crores of revenue for us. In 27, we have a building named B8. That's going to add around 150 crores of top line revenues for us. There's a data center which should be ready in the next 1.5 years. That's going to give us a total annual rental of around 30 crores. And in Airoli East in Navi Mumbai, we also have a hotel cum office building which is under construction. That's going to give us around a 60 crore revenue. So these are all the assets which is under construction now and would be delivered in from 9 months to a 3-year timeline.
Okay, sounds like a solid pipeline. Can you just tell us what is the kind of cost that you will have to incur for all of these projects that you mentioned? Just total.
The capex we are looking at spending over the next 3 years is 3,000 crore. This year, the coming year, FY25, we are looking at around 1,100 crores of capex.
Okay, all right. I wanted to wrap up with an industry question because interest rates are going to change. We are expecting a cut now in calendar year 2024, or at least they'll stay steady. What does it mean in terms of returns on somebody who's investing in REITs? What does it mean for generally your weighted average cost of capital as well?
So this is overall a new product, just about 5 years. Today we have just 200,000 people who invest in REITs in India compared to the 3.5 million Indians who invest in the stock markets and mutual funds. One thing to be noted here is if you look at the real estate universe in countries like US, the 60% of the market value of the real estate market value comes from REITs. In India, it's just around 17%. We truly believe that REIT as a product offers transparency, high levels of disclosure, tax efficiency. There is dividend and growth at the same time, diversification benefits, low risk. It's a very, very well-regulated industry. SEBI has done a fantastic job today. If you want to put it in a REIT, 80% of a REIT should be completed assets. LTVs today, very strict about that. Less than 49% should be your LTV. 90% of your net distributable cash flows to be distributed as unit holders. So SEBI has put a lot of checks and balances for the sector. And we believe this number of 200,000 growing multifold.
Okay, all right, Mr. Nair, it was a pleasure speaking with you. Thank you so much for joining us and looking forward to more conversations because this is an asset class, as you said, is not seeing a lot of interest, but with more understanding, it would be the case. We'll do one thing, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.
Big budget exclusive and the most comprehensive budget interview. Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead in conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive.
Welcome back. Well, steady for the markets. There's some recovery in the Bank Nifty, which is up now 60 points. It was in the red when we started the show, and the Nifty is up 165 points. Keep an eye out on all these energy names. BPCL is up 10%. So this is a space that we'll be watching out for. But with that, we'll take your leave on this edition of Midcap Radar. From Pavitra, myself, and the entire team, thank you so much for tuning in. Your stocks when we return.
Hello and welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra and you're watching Your Stocks this afternoon. Well, joining us today, we have Mayuresh Joshi, who's the head of equity research at William O'Neill, Richard Jain of 5paisa.com to answer all of your queries. Mayuresh as well as Richard, welcome to the show and thanks very much for joining in. Well, before we get to, the queries that we do have, we have the Torrent Pharma numbers which are flashing on your screen. There's a one-time gain which is coming off around 88 odd crores. But the revenue as well as the profit should come up for you. The net profit is coming at around 443 odd crores. It has benefited from a one-time gain of around 88 odd crores. The other numbers such as the revenue as well as the margin should come up 2,732 odd crores. So largely in line with estimates is what they have reported. And the margins are expected to be steady state this time as well at over 25 odd percent. That's on Torrent Pharma. But it's going well for the markets at this point in time. We're holding up with steady gains of around 0.8% currently for the Nifty. So before we move ahead, just wanted your quick take on the technicals. Richard, how would you approach the strength that we've seen today as well as for the week?
Hi, very good afternoon, Ekta. Well, there's no doubt about the broader trend that it still remains positive. We have seen that the intermittent declines which were there towards that 2100 300 support have got bought into. And we have almost surpassed that previous swing highs as well. So that high top, high bottom structure is still getting continued. No signs of reversal there as of now. So I think buy and dips approach should be kept for the coming week as well. Now the support for Nifty is coming around 21,700 to 21,650 range. So I think we could see some another 150 point decline from current levels. But if in case if we get such dips around those ranges, I think that could be a good buying opportunity again.
Okay, all right. Well, maybe there could be a buying opportunity on dips. Let's get to the first question that we have. We have Parag, who writes to us from Mumbai. He holds 200 shares of Bank of Maharashtra, which he's bought at 10 odd rupees. So that's a great gain that he's sitting on. He wants to know what to do, whether he should buy more, hold or sell. Well, it's definitely been a rally of all of the PSU banks. Mayuresh, what would you recommend on this one? Would you be a buyer at current levels?
Afternoon, Ekta. So as a clear disclosure, we are holding the stocks in our global portfolio. So I might be a little bit biased towards this one. But largely, I think if it pulls back a tad bit, yes, he can pyramid more. I think that's the way we look at compounding wealth on our winners. Having said that, Ekta, I think the kind of numbers that have come through, specifically for the December quarter, cost to income ratio has come down to 36%. The asset quality pressures are coming down with every passing quarter. Gross NPS close to 2%, net NPS close to 0.22%. And along with that, I think the kind of provisioning that they have increased, the PCR is at 98.5%, which means that the kind of write backs that they probably might have from a lot of written off assets that can directly compound their bottom line growth. And a lot of PSU banks are probably focused on that, along with strong advances growth. Retail advances have grown 22%. NIMs are close to that 4% mark, 3.95 if I'm not mistaken. And therefore, most of the parameters, most of the check boxes are probably getting ticked at this juncture and not too expensive, even at this juncture with the kind of moves that we've seen. So you can definitely hold on to this one. As a disclaimer, as I said, we hold this in our global portfolios. If it pulls back a tad bit, you can pyramid more onto bank.
Okay, all right. And Ruchit, technically, what would your call be on Bank of Maharashtra?
So I have a similar view to hold on to the stock. Ideally, if you look at the entire PSU banking basket, they have shown immense relative strength compared to Bank Nifty. You see, the Bank Nifty is still not closer to its previous all-time high, which it had recently tested. But Nifty PSU Bank Index is continuing to make new highs. So this clearly shows that within the banking space, the PSU banking stocks have a lot of strength, and Bank of Maharashtra too has witnessed an up move which is supported by very high volumes. So first of all, his buying price is quite low. So he has a good margin of safety that in case if we get any kind of intermediate small declines or pullback moves, then he can continue to watch those moves. And over a period of time, the monthly charts indicates probable targets around 72 to 75 range. So I think if there is a long-term investor, continue to hold on. Maybe around 75, we can take a review again on this.
Okay, all right. So that's on Bank of Maharashtra. Well, let's get to another query now. We have Madhvi Lata, who writes to us from Vizag, holds 50 shares of Tata Motors, which he's bought at 289. So good to see a lot of people making money on various stocks. She wants to know what to do, whether to hold or exit at current levels. What would your recommendation be on this one? Mayuresh, again, Tata Motors has just gone from strength to strength. What is your call in terms of where you would see the stock go fundamentally?
Oh, absolutely. Ekta, stupendous mover within the auto space. And again, a little bit biased because we continue holding this in our global portfolios as well. So I think the change or the transition that has probably happened is the outlook, specifically on the JLR business. And specifically in the last quarter, the management was very, very vocal in terms of the margin expansion, specifically for the JLR business. And that EBIT margin expansion for 24 has been increased to 8% from 6%. What this really does is, because a large part of the business comes in from JLR, the order book has remained strong, both on the wholesale and the retail side as far as JLR is concerned. And expectations of launches on the EV side of their portfolio in the next few quarters, coinciding with expectations of China and North America coming back as far as demand dynamics are concerned, that can fuel a leg up in terms of volume growth. And what it probably does in terms of the investments that they're probably doing, 15 billion odd pounds for the transition over the next 5 years, cash impairments expected to come off. And the India business, both the PV and the CV business, actually holding up means that the consolidated numbers will also be better. Obviously, a lot of that has got gestated in the price, but as these launches happen over the next few quarters and months, I think more and more revisions will start taking place in terms of forward-looking numbers. So yeah, she can definitely hold on to this one.
Okay, and technically, what would you recommend to someone, Richard, who's entered the stock at over 250 odd rupees? Do you think there's more to go when it comes to the technicals of TAMO? Would you buy a stock which is already making new highs?
You rightly pointed earlier, it's going strength to strength. So that should be one clear strategy, that if a stock is showing strength in this up move compared to other stocks within the same sector, so this outperformance is likely to continue till this bull market is intact. Generally, whenever stocks are trading at all-time highs, so retracement helps us to come out with the possible targets for the stocks. And if I look at a bit longer-term charts, then retracements of the previous correction, then short-term targets are coming around 940. Whereas a bit mid to long-term targets are coming around 1150. So I think the stock has potential to rally further. 940 is a very short-term target, but I think 1150 is where it should eye at. So keeping a targets of 1150, definitely continue to hold on the existing long positions.
Okay, all right. That's on Tata Motors. Let's get in another query now. Rahul Khanna writes to us from New Delhi. He holds 15 shares of State Bank of India, which he's bought at 400 odd rupees. He wants to know what to do, whether he should stay invested, sell at current levels. Richard, let's come to you first. You know, the big trigger for SBI, and I'm going to quiz Mayuresh on it as well, is that the numbers do come out tomorrow. It is on a weekend, so the street will react to it come Monday. But technically, Rahul's sitting on a bit of a profit now. But do you think that State Bank of India has more to go and participate in this PSU Bank rally?
So we already covered about PSU banks, when we took that Bank of Maharashtra question, that how the index has been outperforming the Bank Nifty overall. So I think the strength is likely to continue, and given that SBI has the highest weightage within the index, the index cannot move higher without SBI showing participation. So certainly the trend remains positive. Recently we had seen some correction, but again, if you look at the price volume action, then the volumes during the corrections are not that high compared to volumes that we see when the prices are going higher. So which is again a good sign for the stock. So I think the stock has potential to rally towards 700 and beyond in short to medium term. So my advice would be to continue to ride.